Land, labor, capital goes into the production of these goods, and we basically get them for nothing off of the reserve status of the dollar. And the foreigners who are selling us all this stuff, they just take our paper and they buy treasuries or they buy mortgage-backed securities. But when that stops and the dollar crashes, Americans are going to be too broke to afford to import stuff. And we don't have the capacity to produce what we'll no longer be able to afford to import. And so it's going to be a collapse in the American standard of living. And very few people are prepared for that. It's going to happen. You're going to see it through a massive depreciation in the value of the dollar. So yeah, the smart money is buying gold. I mean, they've been buying gold for years because this train wreck was obvious for years. But now, it's happening. Gold is, I think, this morning at 2,040. I think it's headed significantly higher from here, multiples of its current price. And if people were smart, they would take their money out of the bank, their long-term savings. I mean, obviously, if you need money in the bank to pay bills, short-term operating cash, yeah, leave it there. But for longer term, don't leave any long-term savings in the bank because you're going to lose it. Either the bank's going to fail or the money's going to fail. But either way, you're going to lose. So you got to take your money out of the bank and do something else with it. You can buy gold and silver because it's much, I think, safer than owning cash. Or you can invest it. That's what I've done. I mean, I have both. I have gold and silver, but for myself and my clients, we own good dividend-paying value stocks all around the world. These are real assets that are going to retain their value as money loses its value. And if you own a good business that has real assets and that sells products and services that customers need, then you can raise your prices. And you can maintain your margins in an inflationary environment, and you can raise your dividends, which is what I'm counting on. And since the income that the companies that I invest in are earning is coming from outside the United States predominantly, so it's coming in other currencies, which I expect to rise versus the dollar, then my dividends will go up for that reason as well, as you translate them back into cheaper dollars.